still think there are sectors within the economy which will obviously perform better than others into a recession. You know, things like utilities. The problem that people have is that you currently are paying quite a high price for that safety. So there is a decision to be made about value there, and at the sort of individual stock level, that's certainly not my game. But true safety is very difficult to find in a market where, you know, you're expecting the future to be worse than today, and you're expecting, therefore, the earnings of that company to be falling into the future.
James Athey, thank you so much, Senior Investment Manager, Aberdeen Standard of Edinburgh, with us today. And some of the themes, Lisa, that are out there, and, you know, I thought it was going to be a lazy Monday, August. Guess what? No. There's all sorts of things. I guess Hong Kong, the update is, it's gotten quiet there. It's 8 o'clock in the evening in Hong Kong. The airport's shut down. Renminbi really hasn't moved, and I guess you would expect it to move 7.06. Churning, I guess the Argentinians set at 9 a.m.
That's
9:20. Thank you. Thank you, Colin.
Yeah.
Colin of the Twins with the Argentinian foreign exchange minutia is I'm dazzled.
Well, yeah, Argentina definitely assets poised to absolutely fall out of bed with the idea that perhaps they're going to bring back a government that absolutely doesn't care about fiscal responsibility in any way, shape, or form.
But associated with her politics.
Well, it's Kirchner would be the vice president, basically, and that Kirchner would basically be calling the shots. That's what people believe in terms of who would rise to power. But Mauricio Macri clearly losing so much popularity as he tries to preach fiscal austerity, and this just highlights, even if he does slip through, which it seems like is implausible at this point, you know, he doesn't have the popular support to go through with some of the measures.
I mean, a sustained 1.69% 10-year yield. Remember when 2% was a big deal? Well, the 30-year bond went under 3%. We'd all go apoplectic.
You know, there's a question. I was reading some stories this weekend just talking about how these bond yields are pricing in Armageddon. But are they? I mean, I guess that there's a question, have we reached a new normal? And Carl Weinberg was talking about, we're off the grid. We don't even know the right questions to ask. And I think that that's really where we're at right now. Where do we even focus? What are the questions we need to be asking with the low yield regime that we see today?
Well, we will see. It is an interesting take. Negative 21 on futures, Dow futures, and negative 185. There's only one solution, Bruce.
A.m. wake up, update the business plan, meet with the accountant, check out new office space, somehow find time for lunch, print new business cards, fire off 15 emails, do the school pickup, nip out for some networking and triple check tomorrow's agenda before starting it all again in the morning.
Running a small business is hard work. That's why we're doing all we can to make insurance simpler. AXA. Work hard, insure simple. Search AXA Business Insurance. AXA Insurance UK plc is authorised and regulated by the Prudential Regulation Authority and regulated by the Financial Conduct Authority.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect, no words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO! Let's go! Credit is subject to status. Must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. This is Bloomberg Bloomberg Surveillance, Economics.
The good news is the economy is strong. The bad news is the economy is strong.
Financial crises take a really long time to recover from.
Finance.
The strong job market's pulling people back in.
You can't have for very long, monetary union without a fiscal union.
Investment.
What we preach is extreme diversification.
It's hard to have sustained productivity without capital investment.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
Good morning, everyone. John Farrow and Tom Keene, the Bloomberg Interactive Broker Studios. A beautiful Monday in New York here at Lexington Avenue and 59th Street. Farrow lost. He's off Val d'Ory, somewhere in Switzerland. I think climbing the Matterhorn, or maybe it's a different peak. I'm not sure. What I do know is Lisa Bramo has pulled the short straw, and she is here as well. Lisa, the 2-10 spread, that difference in yield between the 10-year and the 2-year, again, single digit this morning.
And this was what people were looking at for some comfort as that 3-month 10-year curve inverted to the most since the financial crisis. People saying, look, this other curve isn't inverted, so we still have time. Well, we are very close to inversion there. So if you're looking for some optimism, can't really find it.
Yeah, the different spreads. I call that the vanilla spread, the 2s10s, and the broader 3-month Treasury bill to 10-year note spread. And then there's even bigger ones, right? There's like 3-month 30.
The bottom line is, period, this is all bad for the banks, and we're seeing that, and it's all negative in terms of the implication for how much ammunition the Fed has to really combat the future slowdown.
Yeah, John Farrow just emailing in from Europe. Tom, I need a quote on the Austrian 100-year. That would be 189.075, up 89% off issuance. That's price up, yield down on the 100-year piece in Austria. Bloomberg surveillance this morning with futures negative 19, improving a little bit. Always brought to you by Cone Resnick. Check out Business of Baseball, an original MLB video series exploring the business side of America's pastime. Visit ConeResnick.com/MLB. Cone Resnick Advisory Assurance Tax. We'll do much more market coverage here, but right now we look at international relations and I guess China, but through the prism of Washington. Jeffrey Wright joins us with Eurasia Group as we consider some of the China themes in Washington. Jeffrey, you've got a brilliant note on Huawei. This is the Chinese company with a big uproar about whether they should be in this country or that country or doing business. Let me begin with the basics. Do the Republicans and Democrats on Capitol Hill, do they agree about the president's approach to Huawei, or are there points of nuance?
There are some points of nuance, but I think there's quite a lot of agreement on Capitol Hill. The person that's perhaps having second thoughts is Trump himself, who's more interested in trading Huawei away for something else, it looks like.
Well, if we trade them away, what do we trade them to? I mean, it's not like, you're trading Oriental Avenue for New York Avenue and Monopoly. I mean, what do we trade them? What do we trade them away to?
Well, this opportunity may have passed over the last week or two as things have gotten worse. But I think if you go back to Osaka in early June, Trump was interested in trading a Huawei settlement for trade concessions from the Chinese. I think maybe that ship has sailed at this point, but that was the hope.
So here's one question that I have, Jeffrey, just sort of speaking to this morning's big news is the Hong Kong protests, the fact that the airport was shut down. And I'm trying to understand how Washington views all of this in light of the trade negotiations with China, with mainland China. How does that unrest factor in, if at all?
I think it's a pretty limited factor from the U.S. side. There are certainly some people who would like to see the U.S. more forcefully come out in favor of these protests in Hong Kong, but Trump is not one of them. The way it becomes really interesting is what the Chinese perceive as U.S. support for these protests, which makes them much more hesitant to deal with the U.S. as they blame them in their state media for the protests in Hong Kong.
But it really highlights the sort of growing fissures, not only socially for China and Xi Jinping trying to solidify his control and his reign, but also economically. We got data overnight showing that China's credit growth tumbled to the second lowest amount this year amid weak demand, not because the Chinese government is cracking down necessarily on leverage anymore so much. How does that help or hurt negotiations?
I think it makes them much harder. sort of in two ways. One is that it's hard, obviously, for the Chinese, would be hard for them to do a deal with the U.S. as they blame them for fomenting the protests in Hong Kong. The other way, though, is that it puts Xi on the defensive internally within the CCP, and so I think it makes it harder for him to pursue a trade deal.
What is your update on his relationship with the Communist Party, and particularly after the summer meetings on the beach there, east of Beijing? I mean, what is his power this morning as he confronts the images from Hong Kong?
Well, I think it's hard to say with any certainty, but what's going on in Hong Kong certainly makes it, I think, it puts his position in a little bit of trouble. I mean, not that he is in any imminent danger, but it would make selling an agreement with the Americans harder, which he already had issues with doing in April and May. So,
one thing I'm struggling to understand, especially as we confront this wall of pessimism this morning, this wall of worry, is just how much the trade tensions have already eaten into global growth. And I'm wondering what negotiators in Washington, D.C. look at in order to assess that, and how much that's weighing on them as they do proceed with these negotiations.
I think it's an interesting question. I think their mandate from Trump is much narrower, though. I think the trade negotiators themselves are focused on, these issues between the U.S. and China, which are actually, relatively long-standing. And I think their remit from Trump is to, work on the trade issues and let him worry about the economy. I think those broader economic worries are something for the political leadership and not the trade negotiators themselves. But, I think Trump is going to be very sensitive to any sign that what he's doing with China has sort of slowed the economy in a way that could be dangerous for his reelection.
We're distracted by all sorts of things, folks. We're looking for Argentina to open up, weaker peso, all the protests in Hong Kong, the airport shut down. But you bring up, Jeffrey Wright, an incredibly important point, which is we're poised and waiting. What is the next step we're going to see from the President of the United States?
Well, the tariffs will go into effect on September 1st if nothing is done. But
what are you looking for if he tweets out in the next 48 hours? I mean, Lisa's glued to every presidential tweet, but Jeffrey Wright, what are you looking for?
I think, the most important two things. One is whether the meeting between negotiators in September is still going forward. If it gets canceled, I think that's a very bad sign that the Chinese are losing interest in this. Secondly, the expiration of the general license for Huawei, which is a week from today, the way the U.S. handles that is going to be, pretty important for the future of the negotiations and how the Chinese see them as a negotiating partner.
So, Jeffrey, I want to go back to something that you said, which I found really interesting, that negotiators don't really care about the economic fallout, or it's not really their mandate to consider